Now censored videos that circulated widely on Chinese social media appeared to show fire trucks unable to get closer to the scene because of pandemic obstacles like metal barriers and tents outside the building. But it is the latest tragedy to renew outrage over China's zero COVID policy.
These protests broke out in a city in northwestern China, where they have been under lockdown since August. Demonstrators chanted "End COVID lockdown" as they faced off against officials who were there enforcing the measures.
Fresh protests have broken out in major cities, with hundreds rallying at Beijing's elite Tsinghua University, chanting "We want freedom." Many also holding up blank sheets of paper in a symbolic protest against state censorship.
Tempers boiling over as a result of COVID-19 containment measures. So the latest we're hearing is that authorities have now agreed to phase out restrictions in Xinjiang. It's worth noting also that videos are surfacing increasingly in China of different protests and unrest in different parts of the country as the situation goes on. And that in itself is an indication that censors are having a hard time catching up and scrubbing this material from the internet before it becomes available for other people to see. And that is something that authorities will be concerned about also, because of the possibility of it inspiring other people to go out and demonstrate against COVID curbs.
The lockdowns in China are now being resisted with widespread protests across the country, and that's what we're going to dive into in this video. So guys, as you smash that like button, let's get into it. What's up guys, and I haven't seen anything like this in China from at least back in the 1990s. And as you can see, demonstrations have erupted in Beijing, Shanghai, and other major cities, and effectively all over the country as people are fighting back against the COVID restrictions. And for many people, they're in their third year of restrictions. They have not been able to resume normal life. And so this is something that you would expect at this point from people, even people in China who are generally pressed down from being able to protest. And so why did this happen? Well, as reported in the Wall Street Journal, the protests followed demonstrations on Friday in Yurmai capital of the remote region of Yanjiang, where a deadly fire enraged residents who had struggled with lockdowns of more than 100 days. And effectively what the residents were saying, and what they flooded social media with, was comments suggesting that the COVID restrictions contributed to a delay in putting out the fire, in which officials said that 10 people had died. And so now you're starting to see open displays of anger in China, which is pretty rare because crackdowns on dissent have intensified over the past decade. And so I would say, since the Tiananmen Square protests in 1989, the ruling party has pretty much clamped down on any sort of nationwide protest. So this is pretty unusual of what we're seeing. And at the moment, because there's so much censorship in their social media, users are effectively racing against the censors to spread images and news of protests along with expressions of solidarity. And so you're seeing things trend like "Long live the people," "May the dead rest in peace," "I love you China," "I love you young people." So effectively all sorts of nods to the resistance and the protests. And now some protesters are even openly denouncing Xi Jinping and his COVID strategy. And so there are clips of people chanting the Communist Party needs to step down. And there's other clips of people saying Xi Jinping specifically needs to step down. And recall, guys, that these tensions have risen subsequent to Xi Jinping actually getting his third term as a leader of the CCP party. So what a challenge to face so soon into your third term. But I can't say that it wasn't a result of his own policies as they addressed COVID spreading in the country. So the question is now we don't just have zero COVID policies, but we have political uncertainty, political unrest. So the question is now the time to walk away from our investments in China? Personally, what I'm doing with my portfolios, I'm probably not investing more into the country, but I'm still going to continue to research different names in the country. For example, there's one behemoth that you guys have been asking me to look into for a long time, and I finally started building out that model for it. And what is that behemoth? Well, you can see here. It's Tencent. And for those of you guys who are not aware of Tencent, it is the #1 company for games by users and revenue. It's the #1 mobile chat engine in China. They have the #1 browser. they have apparently the second largest provider of public cloud services, the number one mobile payment producer, and the number one long-form video, news, music, and literature offerings of effectively digital content in the country. And so effectively what Tencent is a future-focused company. And if China's going to grow, Tencent, of course, is going to grow along with the country. And so it's absolutely a name that we have to understand. The problem is, and the reason why it took me so long to start even talking about Tencent on this channel, it's been 2 years, is because how large it is and how complicated it is. And of course, you guys know I like to dive very deep into the company and sort of figure out the nitty-gritties of all of the individual segments. And I'm going to do the same for Tencent. So let's just do a surface level dive into Tencent for you guys and just sort of give you an idea of how I'm thinking about the company. So you can see here, and I just said it on the top left, that a lot of work needs to be done by me here to understand each segment and its subsegment, but effectively they have a huge digital ecosystem fulfilling lots of everyday needs of consumers. So when it comes to watching videos, playing games, listening to and singing content, reading, making mobile payments, chatting, sharing media items, etc., working in collaboration, and even like going to the doctor. It looks like they have some Tencent medical health apps as well. And so there's a lot here to understand. And this is from a free website called QuickFS that you can get access to. And the first thing that I like to look at is how has their revenue grown over the past 10 years? Well, you can see that the revenue growth rate is pretty high, from as high as 60% a year to approximately 20% a year. And so I don't expect the revenue growth rate to continue this high going into the future, but I do see revenue continuing to grow. Even if it grows at 5 or 10% based on whatever the valuation is, it could be a interesting opportunity. Now, the most important concept and most important item is, what has the return on invested capital look like? Well, notice that the return on invested capital average is 18.7%. That is exceptional. You never see that. And so the more important thing is, how has it been trending? And notice, actually, I'm a little bit concerned, although not too concerned, but it has been trending down a little bit, but it's been trending down from such a high watermark. It's been trending down from approximately 30%. Now it's in the high teens, close to 20%. I'm comfortable with the return on invested capital being above 12.5%. At that 15% area is when I get really interested in the company. And of course, Tencent has my interest. Now, as you can see, this is the model that I'm building out. The Patreons get access to all my models and all the work that I perform at that lower tier of the Patreon level. And so if you want access to all the models, including the Alibaba model, where I put a ton of detail into, you can get access to that with the Patreon subscription at that lower tier, just $5 a month or so, I think. And now, if you look at this model, you can see that their gross profit margins are exceptional. Anytime you have gross profit margins in the 20% or higher, or even like 30% or higher, you know that the company is doing quite exceptionally. Here we have gross profit margins in the 50% area, ticking a little bit lower in 2021 and in 2019, but that's okay. It's still in the mid 40s, which is incredible. What I want to get a little bit more information on is, what is this other non-operating income? I think this is just them buying and selling securities, because I know they do have a large investment portfolio. So that might be that, but I'll dive deeper into it. Now, the other thing that I really want to point out, and this is more important than their gross profit margin, look at their net income margin. It's approximately 40% in 2021, and it's only been increasing from, the 30% area in 2012. And so this is an exceptional company. A net income margin of 15% to 20% is exceptional. If you're doubling that, you're a world-class organization. We already know that Tencent is a world-class organization. It's kind of crazy that it took me this long to sort of look into the company, but hey, we're here now. Now, just looking at their cash flow statement, the one thing that I did notice is that Tencent is much better than Alibaba when it comes to dilution of shareholders through stock-based compensation. Notice that their stock-based compensation as a percentage of free cash flow normally is under 10%. So just based on that metric alone, I'd probably be more interested in Tencent over Alibaba. it did tick upwards in 2021. I want to get an idea of how that is expected to flow into the future. Is it going to be in that 15% range, or is it going to be lower? Now, I penalize these companies anyways for that stock-based compensation, and so the valuation reflects it, but I just like when the stock-based compensation is low. Now, notice that they're making a ton of free cash flow, but they're not buying back any shares, so that net issuance of common stock doesn't really move. And the reason why is that they're redeploying all of the cash that they have. So either they're buying businesses, which you can see me highlight here with the acquisitions line. So they did $10.5 billion of acquisitions last year or in 2021, or they're making investments, or they're investing into businesses. So they have $7.5 billion of investments, or I guess that intangibles is also in buying businesses. It just goes into the intangible asset side. That's what I'm thinking. And it looks like they're also buying stocks of publicly traded companies. And so you're seeing a bunch of this happen. It's all sort of just like flooding into these lines at a consolidated level, but I'm going to have to break this out and show it to you. And the reason why I know that they're doing that is if you look at their balance sheet, notice that they have quite a few items on their balance sheet. Now, they report similar to sort of like the IFRS methodology, where you have your non-current assets at the top and then you have your current assets at the bottom. That's fine. That's just the international standards now of reporting. I don't know if they actually follow IFRS. I doubt it, but that's just how they report under IFRS. And so you can see that their investments, their long-term investments in associates, their financial assets being measured through profit and loss, that's probably your publicly traded securities. They have financial assets measured through comprehensive income. That could be publicly traded securities where they own a large portion of it. And of course, they also have term deposits and cash. Now, I added all of that up on their balance sheet. It sums up to approximately 1.03 trillion Hong Kong dollars. Remember that their balance sheet is stated in RMB, so you have to add those up and then convert it to Hong Kong dollars. That reflects approximately 39% of Tencent's market cap. So that's no small amount. But note that they do have debt. It's a small amount, but I would say that it probably takes away maybe 300 million in RMB. So they don't actually have excess capital of approximately 39% of Tencent's market cap. It's probably somewhere around that 25% area. I'll do the math when I do the full video. But you can see here that here's their debt. So they have borrowings of 171 million RMB. They have notes payable. They also have current borrowings and notes payable as well. So it's not as clean of a balance sheet as Alibaba, but this is more than manageable levels of debt, especially considering that they have $160 million of RMB of just cash sitting on their balance sheet and 110 million RMB of term deposits. So just the cash that they have can essentially wipe out all of that debt. And overall, I do agree with the company that they have a resilient business model. They have a 5-year revenue growth CAGR of 24%. I don't think that continues into the future, but I like their segments. And I like how they have a different niche carved out than what Alibaba does. Alibaba has sort of like that online marketplace, and they're moving into grocery. Tencent is really focusing on these future-focused businesses like fintech, online advertising, gaming, and social networks. And so the thing about investing in Alibaba versus Tencent is I actually don't think you are having so much of an overlap between these two companies. I actually think a better diversified portfolio is owning both because they have such little overlap with their segments. Obviously, they have some overlap, but it's not as much overlap as you would think, especially when you look at it based on how they've broken out their segments here. And so that's it for my first look on Tencent. I wanted to sort of walk you guys through how I look at companies, and it was pretty surface level. I just looked at their financial statements. I looked at their most recent presentation, got an idea of what they sort of do. And now we're going to dive into all of those questions that I have. And I'm going to build out maybe a 2 or 3 part series of just a review of Tencent and whether or not I think it's a good investment for me. You guys make the decision for yourself, but that's where I'm going to leave it. Now, if you didn't see that video on the protests that I put out yesterday, it's very important for you to get an idea of that and sort of how I think about investing in Alibaba. And actually, I did bring down certain expectations for Alibaba, especially their China segment. And so you can get to that video right here.